What's up, everyone? This is John Shaw at Next Level Success, and today I'm going to be talking stocks. So, by no means am I an expert in any kind of way possible, but this is what I'm doing, and hopefully I can get to my goal of reaching $100,000. So, today I wanted to talk about Next Level Success again, and finally embracing the fact that I'm more of a vlog. Now, of course, along the journey, I'm hopefully going to be trying to be motivational and helping others along the way, especially close friends and close family, helping them out, achieve their goals, achieve their dreams. And as I've said, Next Level Success is always about bettering yourself, and I'm going to go and show you guys the journey, because Next Level Success is not a destination, it is a journey. So hopefully it's going to be a vlog of everything I'm doing to get there, and always trying to better myself. Now today I'm going to be talking stocks, and I'll be going over to first I'm going to show you guys just a year ago I started with a practice account, and in this practice account, as you can see, it grew $20,000. Now these are blue chip stocks. Blue chip stocks are well established stocks or companies that normally pay dividends but don't always do, and they're very stable, and that's great companies to invest in, because companies are made to grow, and when they're very stable like these ones, they always have a tendency of growing. Maybe not in the short future, but definitely long term normally. So I want to start with this because I wanted to show you guys exactly that. Now, just over a year ago, I went and I should have stayed with my gut, and I invested in blue chip stocks. As you can see, Tesla, Apple, and Rockstar Games. And as you can see, it grew $20,000. Now, that might not seem like a lot, but I wanted to show you guys this because I didn't even pay attention to this. I went and I started with a practice account, and then after investing my real money, I never went back to my practice account to go back and look on it. And when I finally did, I noticed that I didn't even pay attention to this whatsoever, and it grew $20,000. So maybe it was luck. I know that investing in blue chip stocks is a smart way of investing, but again, I wanted to show you guys that it requires little to no work, and it's just a matter of putting your money in a place and leaving it there. So now I'm going to be going to my actual account, and as you can see, I'm almost halfway there to achieving $100,000, slowly but surely. And as I go, I'm going to be reinvesting more money, and any dividends I make, I'm going to be reinvesting into stocks, always putting more money into this. Along the sides, I'm going to be hopefully trying to grow my brand, grow Next Level Success, and paying the people that help me, being very kind of appreciative, because I appreciate everyone that helps me, and I also appreciate everyone that watches my content and likes watching my content. That's why I do these giveaways. I'm going to be doing them every single month, so keep on watching, because they're going to get a lot more interesting. I got a little thing up my sleeve, and as I acquire a team, we're going to get a whole lot better at this, and we're going to make it certainly a lot more interesting. So much more better equipment to come, and I can promise better content as well. So also, with that being said, I'm going to be investing money into stocks, reinvesting some more money into stocks. I wanted to talk about what I did when I first started. Now, I'm only 23, and some people might be thinking I'm not going to take advice from a 23-year-old, and I completely agree, because I have little to no experience in this, and I have not a whole lot of wisdom in life, but I will tell you my journey of where I started. 5 years ago, just a little over 5 years ago, I started with no vehicle, working for a company where the only thing I had in my name was a 1994 Moto 4 350 four-wheeler and 1992 Arctic Cat 440 Jag. Those were the only two things I had in my name, and After I was done work, I was literally walking up over the hill, down along the side of the highway, walking to the local Tim Hortons and waiting there sometimes 4 to 5 hours until my parents could pick me up. And then as I saved up my money, a week or two went by, and then I went and bought my first car. It was a 2002 bright yellow Sunfire. So, and that's where all this journey started. Since then, I went and worked a bunch of overtime. All during this time, I was putting $200 aside every 2 weeks, and eventually it turned into $26,000 in my bank. All during that time, I was saving money and I was paying off my car. I bought my truck, needed some tires and stuff, so I ended up putting a lift kit on it and putting some really expensive tires and stuff. I got a house. I paid off my house, not the nicest house, but paid off my house, and then I had to get all the things that come with the house: furniture, lawn tractor, snowblower. I went and got my dirt bike. I had my road bike, and I had 2 Skidoos. Now, since then, I realized that owning all those things doesn't make you happy. It only brings more stress, and that's why I was saying that success is a balance of everything. It's not just owning a bunch of things. Success is not just money. And next level success is a journey, not a destination. So I'm showing you guys everything I'm doing to get to that next level success, but I'm also trying to acquire or involve everything else other than money, because it's not just the money that makes you happy. Because I wasn't any happier when I had all those things. It actually brought more of a stress. So since then, I started enjoying a lot more time with friends and concentrating on my mindset. I've had ups and downs along the way, like everyone else. But that's what next level success is: finding the balance of everything and trying to just achieve being happy and getting to true wealth. So now, finally, you guys waited long enough. I'm gonna get into the stock. So when I first started, I had no knowledge, absolutely no knowledge on what I was doing with stocks. I went to my local bank, RBC, and I opened up an investing portfolio. So I went and I invested money in this direct investing portfolio, and then from there I gained a whole lot of knowledge. And when I first started, I should have stuck with my gut and stuck with blue chip stocks, but I tried day trading, and this led to a whole bunch of different things. I'm glad I never gave up, because now I'm a lot smarter with this and I'm doing a lot better. And sometimes I'm seeing $3,000 a day on its very highs, but sometimes I'm normally seeing anywhere from $200 a day, sometimes $1,000 a day, sometimes $1,500 a day. But then again, you also have your bad days where you lose that much, but the overall trajectory of it is always going up, because I'm invested in smart stocks now. Now, when I was day trading, the problem I was doing is I was investing into companies that were U.S. So when I was investing in these U.S. companies, I will go and show you guys where you need to go. I wasn't converting my currency. So every time I was buying stocks, I was wondering where I was sometimes losing like $300. And I was like, well, why is that going on? I wasn't sure exactly what was going on. So I wasn't converting my currency when I originally, and because I wasn't doing this, it was paying the exchange rates every single time. And then that was my first mistake. So I lost like $1,000 first 2 buys I did, and then I said, what's going on? And then after that, that was number 1 lesson learned. So then after that, I learned that you got to go to an investment Canadian account, and you go to your foreign exchange, transfer foreign exchange currency. Wait, what was that again? It was transfer cash and foreign exchange. Then after that, you pick your Canadian investment account after you've already invested your original sum of money. And then after that, you go and convert your currency. And then you go over to US and you put your amount, continue, and then confirm. You'll have 30 seconds to confirm it. And for every dollar Canadian that you convert over to US currency, you'll lose 25%. But you don't necessarily lose 25%. U.S. currency is for every dollar Canadian you have, it gives you 75 cents US. So when you first convert all your money to US, if you're going to be investing in US stocks, you're going to be losing about 25% of your money. It's going to go down 25%. But the good news about this is while you're invested in US companies, for every dollar that you make US, when you go to convert your money back to Canadian money, you're going to convert it back. You're going to be making $1.30 for every dollar US. So for every dollar you make, you're actually making 5 cents on top of that dollar that you're making in the stocks, because US currency is above Canadian currency. So I want to show you guys that how to convert your currency. And then after that, I went and I was investing in smaller stocks where I thought that was going to be going, really had high hopes for it, but I missed out after learning that first lesson number 1. I went, and the hardest part about stocks is controlling your emotions. So I was trying to day trade, and when you try to day trade, it's very hard to control your emotions. By far the hardest thing I've had to do with stocks is controlling your emotions. You see it go up, and then you're like, okay, I'm just go up. So then you go and you're like, well, I missed out. So you go and you buy in again, and then after that, when you finally buy in again, it goes down, and then it's just a headache. So the best thing I recommend is investing in blue chip stocks. It's very safe, and if you get more experience and knowledge, maybe try day trading. I know I wasn't the best at it. At one point in time when I was day trading, I did make like $5,000 in a matter of a week or two, but it just happened to be that these stocks were just growing at a rapid rate. And then since then, I started studying Warren Buffett and being more of a long-term holder than a short seller. A long-term holder is someone that stays in it for the long run instead of day trading. So I started being in it for the long run, and then after that, it stopped growing at a rapid rate. After that, it started going down, and I stuck with it. And then after that, I finally decided that, you know what, I'm going to cut my losses, and I'm going to go and invest into stocks that my original gut was telling me. So now, as you can see, I was in Tesla today because Tesla was performing very, very well. And as you can see, in the last 1 year, it was in June, or in the end of May, was under $200, and now it peaked at just I think it was $538 just this week. So as you can see, it grew a big amount. Now the reason for this is because Tesla, with the world kind of greenhouse effect and global warming and all that, Tesla is trying to reverse greenhouse warming, and he invented the electric car. And then there has been a lot of ups and downs along the way, but now they're finally seeing that Tesla has a huge advantage compared to the rest of the motor vehicle companies. With nearly $100 billion market cap, more than both Ford and GM combined, they're finally seeing that Tesla is at a huge advantage. Some saying 4 years. Most analysts and Wall Street experts are saying that at least a 4-year advantage, and some even saying 6 to 7 years. Now, the reason why I sold out today is because Tesla released all of their patents to the public and told the public that if any of the other motor vehicle companies tried to replicate their patents, they would not sue, because their true vision is to try to reverse the greenhouse effect and global warming. So this is really good news, and honestly makes Elon Musk an awesome person. Although if you're an investor into the Tesla stock, it's not so much good news, because that advantage they had compared to the other motor vehicle companies is not so much of an advantage now. Now, Tesla has released patents in the past, and as you can see, it still kind of went up, but that what was before a 4-year gap maybe is a little bit less now. Who knows? So I just wanted to see what the market, how the market's going to respond to it. So that's why I sold out today. And then I went and I bought into, as you can see, I bought into Microsoft and I bought into Apple. Microsoft has been going up since the beginning of the summer, and it's been staying at a steady rate. As you can see, it's been since really mid-October is when it started growing. And with the Xbox being released, well, that's what they're saying, hopefully being released in near October to December, I think that the right time to buy in is right now. With it showing big growth and new coming technology coming out, that will be a big spike hopefully in the stock. So I started buying in now. And also Microsoft pays dividends. Now dividends is the amount it pays for every share that you own. So for this Microsoft, it pays 51 cents for every share that you own, and it pays it out quarterly. Now that doesn't seem like very much, but if you have $1 million invested in, say, Microsoft, that turns into a big amount of money every 3 months. Your dividend yield is basically a ratio of how much you're paying for the company versus how much you have in return, your dividend in return. So as you can see, dividend yield of 1.23%. Now Apple does not pay as much. Apple pays 77 cents, and its dividend yield is not nearly as much because you're paying almost double for the stock. So you're paying a whole lot more money for the stock, and you're not making nearly as much more in dividends. So it's not nearly as good of a dividend yield, with a dividend yield of 0.98%. Again, paying this out quarterly. Where does it show? Okay, I guess it doesn't show it. But yeah, it pretty sure it pays it out quarterly. I'm not sure why I can't find this, but anyway. So Apple is also performing very well. Just in the last 6 months, as you can see, almost doubled. If we go back 1 year. Really almost more than doubled since February. So it would have been a good time to buy in maybe at June or maybe at the beginning of February. But one thing about the market is you can't time the market. And that's what I was trying to do when I was day trading. That's why it's so nerve-wracking. You just got to invest your money and go. If you want no stress, invest long term, and you got to trust inflation and the economy always going up. So you got to trust the company that's growing, and you got to believe that this company is well established with always building infrastructure and shows positive EBITDA. So positive EBITDA is that a company that shows before taxes and everything else shows that you will make earnings. And that's Apple's certainly a company that has positive EBITDA, and compared to Tesla is not nearly close to as much as in debt as Tesla. But what gives Tesla an advantage is they're building a gigafactory over in China, and with nearly making 1,000 vehicles a week from their expectations, that's going to put them at a huge advantage, putting a lot more vehicles out on the road. And with Tesla kind of having, it's almost like it runs off of, it kind of gathers its own database as it's on the road. So as it's almost like building experience. As a person works at a job, they gain experience and knowledge, and with time, they get better at it. Well, Tesla, the car, is doing that as well on its own. As it's on the road, it gathers its own database, only making it better and almost giving it experience. So that's why Tesla is a good idea, but to invest in my personal opinion, some analysts are saying that only one, from what I can see so far from research, is projecting or expecting up to $6,000 maybe in the next 5 years. Now I can certainly see that. That would be great if you're invested in Tesla. But I wanted to see with the news press release today, how the market is going to respond to that. So I'm holding back, and I bought into Apple and I bought into Microsoft in the meantime. I also wanted to talk to you guys because I'm not nearly an expert. I wanted to break it down for anyone that might be interested in investing in stocks or might have a little bit of extra money, trying to get to that, trying to enhance their wealth, or maybe trying to they don't know what to do with their money and they got money put aside. Something that's very very good, I think, in investing in the stocks, and also it's a good experience and a good way of learning something new. So I'm going to teach you guys on how to buy a stock. Now, if you guys want to find how to buy a stock, but you can't just type in Apple, it won't work. In the stock market, it goes off of stock symbols. So as you can see, the stock symbol for Apple is AAPL. Now you can find this just by going on Google, typing in Apple stock symbol, and then after that it will give you this. And if I were to type it in there, the Apple stock would appear. So as you can see, I'm going to show you guys on how to buy a stock. When I first started, even this stuff, I had absolutely no idea. Didn't even know what a stock symbol was. But I'm glad I didn't quit, because it's a journey. And if, of course, when you start, you're not going to be good at it when you first start. So as long as you don't give up, you're bound to do good. That's the main thing, is not giving up. Because of course you're going to be bad at it when you first start. Well, most people are. Maybe some of you won't, but I certainly wasn't the best. I had no mentor, and I learned on my own. But, so if you want to buy a US stock, or say Apple, you click your account where you have converted your currency. So at this point, we're buying a US stock. Apple's a US stock. We've already converted our currency over to US funds. And then after that, you go into your US account. And then after that, you have an action, either buy or sell. You put in the amount of shares that you want to buy. And market price is if you want it now. If you want to buy it like immediately, or as close to now as possible, you put in market price, and who knows what you'll pay. So it's not necessarily the best thing to do. It's better to set a limit order and be a little bit more patient. But if you want to go and you heard a really bad news, like a company went bankrupt maybe, and it's on its way down, it's plummeting on its way down, maybe then you'd want to sell at market price. But when you're buying into, it's not necessarily the best thing to do, because sometimes you'll pay market value, which is sometimes like $2 above what the share is currently at. So you want to set a limit order, and say for Apple, was at $3.18, or $318.73. And so normally I try to go and cut it back a few cents or something like that. So I'd maybe put like a 317, or no, 318 and 60 cents or something like that. And then I put in whatever amount of shares I want to buy. So you always try to cut it back. It's only pennies that we're talking about. But if you're buying at one point in time, when I was investing in those smaller stocks, sometimes I was buying up to 1,000 shares at one time. So when you're talking on 1,000 shares, as you can see, 10 cents, we'll say 10 cents, and then you times it by 1,000, as you can see, that's $100. So maybe not, doesn't seem like much, but it certainly is a big amount. So also you want to go and you want to keep a close eye on volume, because volume is very important to watch. Volume is the amount of people that are kind of buying, exchanging shares in a given day. So like based off the volume, if you don't have a lot of volume, some of these in my watch list, as you can see, they didn't have most of them. Like this one right here, you want to kind of stick with the volume of at least 4 million, because after that, if you have such a low volume, chances are if you go to sell it at its peak, you won't be able to sell it, because no one will be buying in. So you want to go with a higher volume, and it gives you a lot more. It gives you a lot easier of a time when you go to sell your stocks. So all these little things, I could go break it down more. Little things I know. It's like I said, very beginner, but also requires little work. If you invest in blue chip stocks, requires a little bit of work, and you just do your research once. And as you can see on my practice account, I just did my research once. I invested, and then I came back on it a year later, and I had made $20,000. So keep on watching. I hope you guys like this. A lot more to come as I'm buying more equipment. It's going to be a lot more entertaining as I involve more people. I got a plan coming soon. So keep on watching, because I promise you guys it's going to get a lot more interesting, and going to be a lot more either educational for you guys if you guys are looking to invest in stocks. Eventually I plan on investing in real estate, but the right property hasn't came up yet. So I'm going to be showing you everyday things I do, because that's what a vlog is, and this is what I'm doing today when it comes to stocks, but also all the things I'm doing when it comes to being with my friends and the mindset I have, and trying to just stay positive in life, because we all certainly know that life can be hard on you, and it's not always easy. So stay tuned. It's going to get a lot more interesting, and hope you guys like this little video today.